Hey, and welcome back to another video with NuTax Services. I'm really glad you decided to spend a few minutes with us today. My name is Claire, and today we're having a serious but necessary conversation about the tax and money habits that quietly prevent small business owners from building real financial stability. This isn't about criticism, it's about clarity, because most entrepreneurs are incredibly capable. You know your craft, you know how to cater to people, and you know how to generate income. But generating income and building financial stability are not the same skill. And that's where many business owners get stuck. So let's start with one of the most important concepts in business: margin and revenue. Revenue is what comes in. Margin is what you keep. Let's break this down with simple math. Imagine your business brings in $20,000 in 1 month. Now let's subtract expenses. Let's say $6,000 goes toward delivering your service or product. $4,000 covers rent, software, utilities, insurance. $3,000 goes to marketing and contractors. That's $13,000 in expenses. So from $20,000, you have $7,000 left before taxes. Now remember, if you're self-employed, self-employment tax alone is 15.3%. Then income tax is layered on top. To keep it simple, let's estimate 25% total tax on that $7,000. That's about $1,750. So your actual take-home from that $20,000 month is closer to $5,250. That's why margin matters more than revenue. If you don't understand that difference, you will overspend based on inflated assumptions. And thin margins create pressure. Now let's talk about pricing. Many small business owners set prices based on competitors. But your competitors' numbers are not your numbers. Your pricing must reflect your actual cost to deliver, overhead, taxes, savings, and your profit goal. If your prices only cover your bills, your business will always feel tight. You should be able to reverse engineer your income goals. If your fixed expenses are $10,000 per month and you want to take home $8,000 after taxes, you work backward. You add in your taxes and expenses. Then you determine the revenue required. If your current pricing cannot support that revenue target, the business model needs adjusting. Now let's move into taxes. When you're self-employed, no one withholds taxes for you. That means every deposit in your account includes money that belongs to the IRS. Self-employment tax is 15.3% of net profit. That's before federal income tax is calculated. If you are not setting aside money throughout the year, you are spending tax money without realizing it. Then, when April arrives, you most likely owe more than expected. Then, penalties may apply, and interest compounds daily. This is how profitable businesses feel broke. Now, let's talk about business structure. Many entrepreneurs start as sole proprietors, which works in early stages. But as profit grows, your tax structure should be reviewed. For some business owners, electing a C corporation status can reduce self-employment tax by splitting salary and profit distributions. But this only makes sense when the numbers justify it. You must calculate your net profit, reasonable salary, payroll costs, and overall tax exposure. All that being said, you need to have structure, because if you never review it, you may be overpaying year after year. Now let's talk documentation. You cannot protect deductions you cannot prove. Mileage must be logged. Home office must be used exclusively for business. Meals must include a business purpose, and contractors must receive proper 1099 forms. Clean records reduce audit risk. Messy records increase stress. And stress clouds decision-making. Now here's a simple system that changes everything. Separate your money. When revenue hits your account, don't leave it in one place. Create structure. For example, 30% for taxes, 40% for operating expenses, 10% for retained profit, and the remainder for owner pay. The exact percentages may vary, but the discipline matters. When money has a job, immediately you stop overspending accidentally. Now let's talk about owner pay. This is where many business owners quietly sabotage stability. There are two extremes. The first extreme is overpaying yourself. Money comes in and you transfer large amounts into your personal account because it feels available. But now the business runs tight. You rely on credit. You delay vendor payments and pressure builds up. The second extreme is underpaying yourself. You leave everything in the business and barely pay yourself. Oh, now your personal bills feel tight. You rely on personal credit and you resent the business. Owner compensation should be structured. Let's say after expenses and tax reserves, your business has $7,500 available monthly. You might decide to pay yourself $5,000 consistently and leave $2,500 inside the business as retained earnings. That cushion creates breathing room. Breathing room reduces stress. Now let's connect personal lifestyle. If your personal fixed expenses are $8,000 per month, but your business can safely pay you $5,000, that gap creates pressure. Pressure can lead to taking low-margin clients, underpricing, overworking, and chasing revenue instead of protecting profit. Your business cannot stabilize if your personal life is financially overextended. Now let's talk cash flow timing. You may be profitable overall, but stressed monthly. If rent is due on the 1st and client payments clear on the 15th, you feel squeezed. That's timing. Forecasting 60 to 90 days ahead prevents panic. Be sure to look at your upcoming expenses, expected payments, quarterly taxes, and debt obligations. Prepare and budget. Be mindful. Preparation replaces stress. Now let's address credit use. Using credit strategically to expand revenue is different from using credit to survive. If you rely on high-interest credit cards for routine expenses, margins are too thin. Interest eats profit. Less profit slows reinvestment. Now let's talk retirement. Skipping retirement contributions to keep more cash now often increases taxes and reduces future security. Accounts like SEP IRAs and solo 401ks reduce taxable income while building long-term wealth. Tax strategy and retirement planning should work together. Now let's talk about doing a monthly review. Your profit and loss statement shows patterns. Check for patterns like, are expenses creeping up? Are margins shrinking? Are subscriptions stacking up quietly? Doing a monthly review helps fix small problems before they become big problems. And don't forget quarterly estimated tax payments. If you expect to owe more than $1,000, the IRS expects quarterly payments. Skipping them can result in penalties even if you pay in full later. Quarterly planning keeps you steady. Now let me explain why. When a business struggles, money comes in, bills get paid, the owner takes what feels available, and taxes are handled later. When a business is structured, money comes in, percentages are allocated immediately, taxes are protected, owner pay is consistent, numbers are reviewed monthly, and quarterly payments are made. As I just explained, your business can be chaotic or have steady growth, and steady builds confidence. With confidence, business owners make better long-term decisions. Being a small business owner, you should be able to increase your net income. You should be able to strengthen not only your business credit, but your personal credit, which then helps improve your borrowing power, which falls into being able to build retirement assets and overall create generational financial freedom. If your business is busy but not building wealth, the system needs adjusting. It's time to pivot, time to rebuild. If this conversation helped you see your numbers more clearly, that's growth. If this video provided value, press the like button so more business owners can hear it. Subscribe to our NuTax channel because we focus on real financial structure, not surface-level advice. And if you're ready to move from guessing to operating with a clear, financial structured framework, click the link in the description and schedule an appointment with our NuTax team. You built your business for independence. Now let's make sure the numbers support that independence. I'm Claire, and thank you for spending this time with NuTax Services, and I'll see you in the next video.